Hey, this is Bitcoin Asset Research with Allard. Today I want to talk about why the largest squeeze ever is coming to Bitcoin. At this point, all of the dominoes, all of the dynamite are in place for this to happen. First off, you have IBIT options that launched this week, and that enables an unparalleled gamma vanna squeeze to emerge. MicroStrategy and other copycats are starting to corner the spot market, and of course there's possible nation-state FOMO starting in 2025 or 2026. So IBIT options had the green light for several weeks. I did a video about this a few weeks ago covering how this was a watershed moment for Bitcoin. And they just started trading this week. So these options, they actually went live 19 November on Tuesday. And then 2 days later, weekly options were added to the mix. Now, volumes have been exceptional. You can see over here, this was on the very first day, $446 million of volume in the opening hours, and then $1.6 billion of volume by midday. And then when you come to look at the option chain statistics, you can see that it is heavily skewed towards the call side. So definitely a lot of bullish sentiment over here. On open interest and volume, the money in calls is about 3 times the money in puts. Now, why are options important? Just to do a quick review of this. They signal the legitimization of Bitcoin as an asset class. Every major asset class has very deep options markets. There's really no exception to this. When you look at the tier 1 options, these all have daily expiries. So every single trading day, you'll have options that are expiring. And here you have the S&P 500, the S&P 500 ETFs, the NASDAQ 100 ETF, and this is the Russell 2000 ETF. And then the tier 2 assets, you have the US government long-dated bonds, you have gold, and you have silver, and these have expiries on Monday, Wednesdays, and Fridays. Every single Magnificent 7 stock has very liquid weekly options as well. Now, options also enable hyper-reflexivity in the markets. And what I mean by this is that immense rallies can start via self-referential actions of market participants that are caused by option markets. So this is due to something called option Greeks and delta hedging. We're just going to go through this. But first, we're going to talk about why in Bitcoin's case, it can actually get much more crazy for 2 main reasons. First off, Bitcoin is absolutely scarce. This is a well-known fact about it. So when the price goes up, new supply is not going to enter the market to push the price back down. So that's something that's going to make these price surges much more violent for Bitcoin's case. The second thing isn't too well understood, but we're going to unpack it in this video. So Bitcoin's implied volatility actually increases while its price goes up. And this is very unusual. Equity indices don't have this. You can see that because generally speaking, the S&P 500, this is the SPX, the S&P 500 and the VIX, or the volatility index for the S&P 500, they move inverse to each other. So when the SPX goes up, the VIX tends to fall down. And when the SPX goes down, that's when the VIX tends to go up. They have this inverse relationship. And Bitcoin, importantly, does not have this inverse relationship. Gamma and vanna squeezes can happen at the same time. This is the main impact of the fact that Bitcoin does not have that inverse relationship. And for us to really understand gamma and vanna, it's important to understand delta and delta hedging. So delta is really how much the option price changes when the underlying moves. In this case, the underlying is IBIT, or the Bitcoin ETF by BlackRock. Delta hedging is something that market makers do in order to get their total delta to around 0. So the way that works is if they have a bunch of options, they're going to have a delta that comes from those options, and then they're going to take that delta and get that delta to 0 by buying or selling in the spot market. So let's say their total delta is 100, then in that case, they'll need to sell 100 IBIT shares in order to get that delta to 0. And if the delta was negative 100, then they would buy 100 IBIT shares to get that delta to 0. And this is this activity that's always happening, and it's always going to keep happening while the market makers have these option contracts on their books. Now, gamma is how much delta changes when the underlying moves, right? We're now starting to address gamma in the gamma and vanna squeeze piece. Now, when the underlying moves, it's not just the option price that moves, it also affects the delta. And the amount that it affects delta is called gamma. Now, gamma is always going to be positive for long options. So what that means is delta is always going to go higher as the underlying moves higher. And this is just a quality of gamma. And then the next thing is vanna, which is probably the least well-known Greek out of all of this. This is how much delta changes when the implied volatility moves. So when the underlying moves, it changes delta via gamma. And when implied volatility of an underlying moves, that also changes delta via vanna. And so you can probably start to see how Bitcoin is going to be impacted by vanna. because when the underlying moves higher, the implied volatility also moves higher, and both of these factors will impact delta by making it go higher. So gamma and vanna in this case are working together. So let's just break down how that works out. This would be a gamma squeeze happening, okay? The IBIT price goes up, and then gamma causes calls to gain delta thanks to the higher IBIT price, and then market makers must buy more IBIT to be more delta neutral, right? Because the calls are negative delta for the market makers, and the market makers must buy more IBIT to get delta to 0. If they buy more IBIT, that causes IBIT price to go up even more. Now, vanna squeeze happens in a very similar way. When the IBIT price goes up, it causes this implied volatility to go up, right? This was the property we just talked about, that second main thing about Bitcoin that's going to make this thing much more violent. When Bitcoin's price goes up, its implied volatility also goes up. Now, vanna is going to cause those out-the-money calls to gain delta thanks to the higher implied volatility of Bitcoin. Now, that is going to make market makers buy more IBIT to be delta neutral, right? Because these deltas just got higher. And since the market makers are short all of this delta, that's going to be like this higher magnitude negative number. And so they would have to buy more IBIT in order to get to delta neutral. And if they buy more IBIT, that causes the price to go up even more, which through that relationship we mentioned causes Bitcoin's implied volatility to go up more. And then we go back to step 1. So both of these things, the vanna and the gamma squeeze, are highly reflexive. Note that vanna squeezes are not normal, at least not normal for equities. In the S&P 500, when the price goes up, the implied volatility goes down. So vanna is going to reduce the delta on the out-the-money calls. And so market makers don't have to buy more S&P 500 units. So vanna basically counteracts gamma as the price goes higher for equity options. But again, we're not talking about equity options. We're talking about Bitcoin options. This is the reason why equities don't melt up, but Bitcoin probably will have this melt up. It's just the fact that Bitcoin's price and implied volatility are positively correlated, and that enables a gamma squeeze and a vanna squeeze. So it's going to be like a gamma vanna squeeze at the same time. Now, if you're learning something so far, I just ask you to like, subscribe to the channel, share this video with somebody, ask a question, leave some kind of comment. These all help expand the reach of the video, and I'd really appreciate it. Now consider that the Bitcoin market is getting cornered. So now moving to the second reason why this parabolic squeeze is about to happen to Bitcoin. The Bitcoin market, the spot market, is also getting cornered. You have entities that are buying Bitcoin like there's no tomorrow. MicroStrategy is definitely the biggest of these, but it is obviously not alone. This is the research report that River published in September of this year. Business Bitcoin adoption grew by 30% in 1 year. It definitely gives us a starting point to understand how corporate Bitcoin adoption is growing. MicroStrategy announced a $42 billion plan. They did this on their Q3 earnings call, and they plan to raise $42 billion over the next 3 years in order to buy Bitcoin. They're definitely ahead of schedule on this thing. $2 billion was raised within the first 2 weeks after announcing that plan. Then a few days later, you have this $4.6 billion raise, also from at-the-market offerings. This was the 8K that goes in detail about what happened. Then you have this $3 billion convertible notes raise that happened just a few days ago. But they're definitely not alone. You can see Mara completed a $1 billion raise of convertible notes. And this was upsized from a $700 million initial offering. So you can definitely see the demand for these Bitcoin-backed securities. Selmer Scientific was another small cap company that has adopted a Bitcoin strategy. They're also pursuing at-the-market activity, basically issuing shares to buy more Bitcoin. Then in the last few weeks, you've had two smaller companies. Here's Solidian Technology, and here is Genius Group, that both adopted their own Bitcoin treasury strategies. And Genius Group in particular has stated that they will utilize at-the-market offerings to buy Bitcoin as well. Both of their stocks have gone up since this announcement. Here is Solidian Technology, and here's Genius Group. And of course, we have Microsoft, which is considering a Bitcoin treasury strategy as well. Michael Saylor is supposed to be pitching this idea to the board. Right now, the board recommends shareholders to vote against this proposal. But the very fact that this is being discussed at a company like Microsoft speaks volumes. What happens when a few of these S&P 500 companies with billions of dollars in cash, what happens when they get in? What happens when 5% of the Russell 2000 realize that Bitcoin is like bringing a machine gun in the fist fight for market dominance and outperformance? This is simply the result of adopting hard money as your capital asset. What happens when traders realize all of this and they start buying out the money IBIT calls en masse? That stuff can trigger a squeeze in the first place. And here's another thing, the US Bitcoin Reserve. Now, I don't want to speculate too much on this. Bureaucracy moves very slowly. We probably shouldn't count on this happening. What we can probably count on is whether other nations might move first. They see the US might be doing it, so they decide to get in earlier because that would just be the sensible thing to do. So nation-state FOMO might really cause a true God candle. Now, how do you prep for this? Cold storage Bitcoin, definitely a huge component of this. Get Bitcoin equities, things that are increasing BTC per share over a sustained period of time. Call options on Bitcoin equities gives you much more extreme exposure to the above. And then, of course, IBIT call options give you that direct exposure to Bitcoin's price action. So in a vanna gamma squeeze situation, out the money calls will give you that massive exposure. You're also helping the calls in a way because your contracts would be adding gamma and vanna to the market, and that's effectively the fuel for these gamma vanna squeezes. So if you enjoyed this video, give it a like, subscribe to the channel. Thank you so much for watching. I'll see you in the next video. Bye.